Hi, hello everyone. Welcome to today's class. As of today, we are going to be going through forex market structure. Just let's say market structure. This is one of the most important topic that you need to be aware of as a beginner, because I believe most of these are going to be the preliminary thing that you need to learn. No matter how it is. So with time, you're going to get to understand the rest of the market structure, and then the rest of how the market works and forex trading at large. So I'm just gonna give us some few insight about this whole thing. And then when we look at those of us that are participating in the forex market, I'm going to only emphasize on we retail traders, that we are basically trading for the purpose of gaining profit, right? So if we are to say that in a way, so most definitely, even the central banks and some other industries that are also involved in the forex market, we are still here for our own personal purpose and benefit. And that is why we are trying all of our best to analyze the forex market, so that we can get all of the ideas of how to make our profit, and then to minimize the loss that we are going to have over here. So the first thing first, I'm going to talk about the trading section. This is the first thing that I'm going to talk about, the trading section. Okay. So for the trading section, we have three types of trading section. We have the Asian section, we have the London, and then we have the New York section. So all these things are not even something complicated, so we don't have to spend too much time on it. And please, when you have a question, just reply in the group, or you can DM me privately for your question as well. So for Eastern section, this is attributed mostly to those living in Asia and the forex market, or PS, or asset that has been traded in Asia. Why the same thing goes to UK and then New York as well. And most of the currency that we have in Asia, if you actually watch the last class, we talk about some of these as let me zoom these. Okay, so we have some to be like JPY, like AUD, and so many of them like that. Over here we have GBP, and then New York we have like USD and some other assets like gold and something. So I'm just trying to give us example of PS that actually work with this section. But this section is prominent to whatever asset, either cryptocurrency, either forex, either some other asset that you are trading. This section is very, very important for you to know. And this is what actually allow us to know what's the exact time, what's the right time for us to come to the forex market to trade. So that is this about that. And then I'll be moving forward to letting us know that these can also be identified properly. Let me go to 4 hours time frame. So on my 4 hours time frame, I'm going to delete all this. I can identify, okay, let me say 1 hour time frame. So it will allow me to identify which of these is for the section. So we have the day section. I'm actually breaking the day section right now. So we have Friday, we have Thursday. Okay, so let's say for example, now this is a whole day. This is a whole day of trading. Initially, we have some indicators that can allow us to know each of this section. All right, so but we have to learn this manually first before we use the aid of indicator. So here we have this to be Asian section till 7 p.m. All right, I'm actually using Nigerian time right now, so you have to set the time over here. You can set your time. Can you see? You can set your time to know this is not Nigerian time. This is Turkish time, but you can use Nigerian time no matter what time you want to. You just set it over there. So we have from here to it overlaps to like around 5 o'clock. That's London section. And then we have the New York section starting around 1 p.m. So till 11 like this. So we have some overlapping over here. So the market structure will allow you now to know what time is some particular banks entering the market. So for example, now in just the normal word, the normal day word, when you have, let me just label this for us so we can understand it very well. When we have someone that wants to go to the bank, you need to understand what time is the bank going to open, and then you need to understand, what time are they going to close, and then what time are they going to be on break. So once you understand those three things, then I think you are okay. So first thing first, after understanding this section, the three sections that are here, you have the idea, okay, there are some assets you can actually trade during Asian section, during NY section, and during UK section. Like I said in the previous video, I said that where you are presently determines, and it really matters, so much when it comes to trading, and when it comes to you actually ascertaining or determining what to trade and how to trade and what time to trade. And then again, don't forget that these are actually more of currency pairs as well. When it comes to market structure, the structure are a combination of different topics, and then I've actually discussed just about section now. So let's go to currency pairs. The other time as well, I made some very good example about currency pairs, so we are not going to go back there. I'm just going to press like let's say USD, all, let's say Euro USD, okay, Euro USD. And then with the fact that we have major currency, minor currency, and exotic pairs. So these major currencies are the ones that are very, very popular. Let me give us an example. Let's say XAU, USD, Euro USD, GBP, JPY, and some other currencies like that. The few minor currencies can be like let me give an example of let's say JPY, CAD, JPY, or something like that. I mean, they are not very popular, and most of these ones are always volatile. What I mean by being volatile is that the more they can actually give you money, the more they can actually take it from you. So they are very, very volatile, and then they have very, very strong move when it comes to the market and the way they function and the way they work at large. So another thing, we have to talk about the price action and trends in the market. This are also part of market structure. So let's go to that. I'm going to use 4 hours time frame at first to enlighten us about uptrend, downtrend, and sideways market. So we have the uptrend. The reason why I'm trying to make this to be very simple for us is just to allow us to get the idea very well. And then we have the sideways. Okay, so now I believe a whole lot of us have actually heard this song here before, or watched series of videos or something. We are not doing this to be like a YouTube standard video or something, just for the purpose of learning and mentorship. For over here, when we have a situation where we have uptrend, as the English implies, we say uptrend. That means it's going up. It's situation like this, and price moves in waves. What do I mean by price moves in waves? That means the price is like you can see price going up like this without having any break. Price doesn't move that like this, so you have to move in waves. Can you see? Wave, yeah. So we have the low, high, higher, low, higher, high, this and that, and this and that, as the English implies. So for now, we have another one called the downtrend. We have this one called the downtrend, and then again we have what you call the sideways. So the sideways over here is to tell you that the market is ranging. Some people call it consolidation. So since we have this now, let's just go real quick to the real life chart, and then we can see different example. I'm going to like list them out to us. Like I will label them so we can actually understand. It's working. Okay, so over here we have this to be a downtrend. This is a downtrend. This is a downtrend, and the reason why it's a downtrend is because we can also see that the markets keep decreasing in price. The price is decreasing, and don't forget that we have our price over here. Can we see? Because we started the price over here around 1077, and then the price came all the way down to 1066. Sorry, 1.066. This is a decimal number. So all right, over here we have we have another downtrend. And you hear some people, they say they prefer to trade a market that is selling than to trade a market that is buying. No, it doesn't work that way. Any of this market can actually buy or sell, and you can still make a profit, no matter what and no matter how it is. Over here, we have a uptrend. Okay, we have a uptrend over here. And this is a very good example of a uptrend, because the market is increasing in price. What's going to actually help you as a beginner is that you need to do your backtesting. What is backtesting? Like, you have to go back to your charts personally and then look at some of these examples, and then you have to try them out and see how they work perfectly. Over here, we have a very good downtrend, which is very, very obvious. Can you see? Yes. And then please don't misquote me, don't get me wrong. It's not like this thing is gonna be very, very equal. Can you see we have this is not actually equal, unlike the others. Okay, this is an example. Can we see this? So now it's not actually equal. It's not something you have to be ruling with your pen or ruler or something. Just draw it out. In as much as you have the understanding of what the market is trying to tell you, then you're okay. So we need to understand sideways market as well. Okay, so for sideways market, it means that there is no much of volume. And then again, why do we know the best time and the best section to trade? Most of the time rather, those of us in Africa, Europe, UK, we usually don't trade Asian section because of the timing. All right, and why those in US and Asia in particular can actually trade their Asian section, and why they themselves also they don't have the privilege to be trading some pairs because it would be like in the either midnight or go to job or night shift or something. So now we have this to be the sideway, and the sideway is mostly Asian section in our own time. So it's not always really moving. It's not always really going the way you want it to go. It's just ranging. Can you see? There's not much of a move here. I'm not considering the time frame over here. I'm just giving you the insight of what it looks like. Can we see? It's not going up. It's not coming down. It's just sideways. So this is a real example of what it looks like to have what's it called, a sideway in the market. So to continue with this, we have some other things. We have on the accumulation, distribution, and stuff like that. Accumulation is over here. There's a lot of traders and buyers. There's a lot of buyers and sellers, which are also traders. They are trying to buy and sell, and then they are trying to see who is going to dominate, who is going to move up, who is going to move down, this kind of thing. So that means they are accumulating over here. And later on, you see the distribution over here. That's why we say sometimes it breaks above. Can you see? We have the distribution happening, and then we go to the upside. It's just some big English. It's nothing really crazy. So I'll give us more example that we can work with. So these are some of the other examples. This downtrend. Okay, I think I'm gonna attribute this to be a uptrend, a mini uptrend, not that much. In as much that we can see the way it's going up, it's not like trending with that much, because we are moving in a very good range, and it's giving the vibe of buyer support, seller resistance kind of thing. Yes, clearly support. Yes, clearly downtrend. Let's say uptrend. Can we say without stressing ourselves? There's an uptrend. There's a downtrend. All right. The next thing that we're gonna be looking at is that the time frames. These time frames, I also made mention of them in the previous video. So I have to check very well. I'm going to put it down for us to understand. And then we see over here, we see the daily time frame. This time frame are very essential for us when we come to what we call the multi-time frame analysis. So when it comes to multi-time frame analysis, this is just to help you as a trader to have the proper understanding of your market analysis and then your market way of doing things, so that you don't have, so that you don't have to be, so that you don't have to be stressed about it, no matter what. And then now, it also helps you to know where to expect some big volumes, some kind of big entries, some kind of big lots and something like that. So sorry, big movement in the market and something like that. So now for me, if I want to do my analysis, I just start with daily time frame, And after that day time frame that you are seeing here, it's just like overview, the overall view of the market. Because let's see from here, this is February, October 2023, and then right here is like July 2024, and then we have over here the 4 hours time frame, and we can see it is more simplified for us to understand. I can see my support and resistance. I can see my uptrend, downtrend. Let's say this is uptrend, I mean, regarding to this video for learning purpose, this is just what we just learned. And then over here, we can say we have ranging. This is ranging the market, right? Or we can call it either like sideways or something, So for here now, we can still say, okay, this is some more of down uptrend, and then the one main reason that you need to understand why you need to understand trend is because without that trend, you really cannot understand the market and how it works. Because that trend will give you the very, very first vibe of what you need to know. Like, are we on an uptrend? That's the first thing that comes to my mind in the morning, even when I want to trade. Are we on uptrend? So if you are being on uptrend, if you are on uptrend, then you are first starting to understand where to go that day. Because some people talk about counter trading, or like trading against the trend, which is actually not good. I'm not trying to condemn or blame their strategy, but then when you trade properly, when you trade the best in the best way, you trade the proper way that you're supposed to trade, then you have any problem when it comes to taking your trade. So uptrend, and then I can see perfectly here on Euro USD that I'm going on a downtrend. So these are part of the reason why we love to understand the time frame in the market. Can you see something of this nature? And don't be so scared to draw as many as possible lines. I mean, if you're just starting, later on you're going to understand how you can just bring out your starting point in the market, so you won't be confused. And then when you go down again, because each time frame has their reason, and they have the purpose of why we are using them, and purpose of why we are taking them into action, or why we are analyzing them. Is just for us to have proper understanding, deeply in the market. Can you say in this kind of situation now we're supposed to have a buy with the way market actually works? Some other factors, either fundamentals, either some other big moves in the market that actually happened previously, might not allow you to happen. But then I'm just trying to explain to you for educational purpose. All right, so we have some other thing like liquidity when it comes to market structure. But liquidity, volatility, volume are just to identify how the market has been moving so far. Liquidity on its own is a topic that has to deal with ICT. But then when we want to just understand the market structure in the early stage, so I'm just gonna talk about volume and volatility. So volume is just the number of people presently in the market. So there is a way we can identify it when you come to our indicator. When you come to your indicator, you can just click on your volume over here, or better still, try to look at these candles. Can you see? There are some candles that are very, very big. There are some that are very, very small. Can you see? Very long candle, very long candle, very long candle, and then there are some that are very, very small. They are just so small. They are very, very small. So this is a part of the thing that we check when it comes to volume. And then again, volumes actually comes during opening or during fundamentals in the market. I mean, more of it. So if it would be an opening of a day, like let's say opening of a New York section, or opening of a London section, there's a whole lot of volume, because a lot of traders are actually anticipating that right from last night, and then they want to either long or short in the market. So the next thing that we're going to be going to is the identifying our support and resistance. So please, if you have any question about this market structure, I would like you to ask. Thank you.